from Malaysia. It is indeed a pleasure to have all of you here at the Malaysia stage of the Singapore FinTech Festival. Thanks for the opportunity to share our aspiration and vision and opening new possibilities in collaborative manner going forward. This event gathers many FinTech leaders to share opportunities and develop substantive, actionable ideas for the development of financial technology relevant to Malaysia's and our partners. As the Malaysia FinTech industry representative, it is our aspiration for the industry to come to an understanding on implementing substantive and collective solutions to several key subjects that we had intended. One, going beyond the concept of granting access to promote financial inclusion. Two, viable FinTech solution to better serve the underserved and unserved. Three, enhancing the capability of the alternative financing ecosystems. Four, financing viable solutions for the socio-economic issues. Last but not least, five, enhancing financial and technological literacy. We will also have the opportunity to hear from various speakers, leaders, and FinTech companies on how the world around us are changing and how to dynamically evolve with it. Ladies and gentlemen, allow me to share progress and achievements of Malaysia today. It has been almost 7 years since I came across the word FinTech and been involved with it. At national level, our government via the financial regulators such as Bank Negara and the Securities Commission, and agencies like MDEC, MAGIC and MAVCAP are providing various platforms, funding opportunities and policy frameworks for the FinTech stakeholders to create, deliberate, implement and scale various solutions that facilitates effort towards transforming Malaysia into a high value added and high income economy. The government goals is to move the financial system towards higher level of stability, efficiency and competitiveness that facilitates empowerment of the economy of today and build relevant capacity for the future. Judging by the financial data provided by our central bank, we note that the financial sector is steadily advancing towards these goals. Despite the current climate, the capital buffers of banks and insurers today collectively stand in excess of over Ringgit Malaysia 144.6 billion above the regulatory minimum levels. At the industry level, in response to the rapid inroads made by FinTech, we are seeing two distinct efforts taken by the industry stakeholders. First, the incumbent financial institutions are pivoting by leveraging on its resources, huge collection of data, and competency of its middle and back offices to either galvanize organic restructuring or collaborate with selected FinTech partners that could enhance their value proposition. Second, the FinTech players themselves are challenging the incumbents with nimble business models that, among others, could unbundle and rebundle financial products and services with focus on customer empowerment, mobile technology, minimal capex and opex, as well as better consumer and customer experiences. As a result, since 2016, the Capital Market Regulator has progressively licensed more than 25 recognized market operators or RMOs, spanning across 5 different categories. And they have cumulatively facilitated more than Ringgit Malaysia 1 billion up till September 2020 and benefited more than 2,500 SMEs. As for the digital asset exchanges or DAX, cumulative value traded has surpassed Ringgit Malaysia 100 million up till August this year, and this was made possible through the 400,000 accounts across the 3 licensed DAX. As for the financial services sector, the short-term performance of the incumbent banks is understandably eroded largely to the impact of the blanket loan moratorium from mid-March to end of September this year. With lack of catalysts for better performance, both on interest and non-interest income, as well as cuts on OPR, that has negatively impacted the bank's net interest margin result. However, the structural integrity and bank's depositors' confidence is evidently intact, with high rate of internet and mobile transaction from January to September 2020 compared to the prior years on value and volume. The number of subscribers to internet and mobile banking is expected to grow by 46% year on year compared to 7.8% previously, and with penetration to population of 109% from 97% for the same period. Having shared Malaysia capital market and financial services achievement thus far, I'm confident that these continuous government initiatives to digitalize financial and capital market institutions, coupled with the renewed focus on consumer empowerment through financial inclusion, is the right formula for a fair and equitable shared prosperity. Ladies and gentlemen, let's focus on where Malaysia wants to go. We are now under a new supernormal. One, because the impact of COVID-19. Two, because of the rapid advances in technology. And three, because of increasing tech-savvy demographic. These specific elements are presenting both opportunities and challenges to us. A FinTech opens either a path to disrupt or to collaborate, as well as COVID-19 disrupting the way we conduct and consume our businesses and services. These combined elements have emerged as a major game changer with a multifaceted value proposition. The nascent yet growing FinTech space has a raging ambition. One aspect of it aims to revolutionize the entire value chain of financing, and from another aspect, FinTech startups all over the world are making significant inroads and openly challenging the traditional financial players in their own space. At the core, FinTech is reshaping consumers' expectation of financial services, and yet FinTech also offers tremendous opportunities to financial and capital market institutions, provided that relevant and timely pivots are being made to serve the increasingly tech-savvy demographic. With 32 million population, high mobile and internet penetration, diverse population, and a growing middle class, Malaysia is an ideal testbed for developing and commercializing FinTech solutions. What is needed is to create global brand awareness about these compelling attributes, together with an efficient adoption process for the stakeholders, domestic and international, to invest in the following key areas: talent, technology, value creation, financing, and governance. Key to making this a success is for the stakeholders, especially policymakers and industry board members, to transform their fears into familiarity by learning and relearning about holistic digitalization strategy and approach, in pivoting their mindset, approach, and organization. It has to start with a mindset that FinTech is an enabler, not a threat, to facilitate necessary risk. It has to start with a mindset that FinTech is an enabler, not a threat, to facilitate necessary shift on structural, cultural, behavior, and operation where required. It is crucial for the leaders to set the right tone from the top by making digitalization as a boardroom priority agenda and allocate sufficient capital and resources to make it a success. It is also key to comprehensively infuse an appropriate culture of innovation, as well as managing the unintended consequences, including the socio-economic aspect, for it to be successful. It is also key to comprehensively infuse an appropriate culture of innovation, as well as managing the unintended consequences, including the socio-economic aspect, for it to be successfully adapted throughout the organization and industry. Having said the above, I'm excited that the forthcoming digital banking license is actually an example of an actionable step that is expected to facilitate the vision of driving Malaysia to be a high-income economy that practices financial inclusivity and democratization as core for financial services offerings. The digital banks are expected to be required to deploy better customer experiences, promote cost and operation effectiveness with appropriate safeguards and viability to scale its business. It is also expected that the digital banks to build appropriate capability that augment human wisdom and experiences with technology as the DNA of their business model. Ladies and gentlemen, as the industry representative, we aspire for the Malaysia financial and capital market sectors to be more integrated to facilitate stronger economic and financial linkages with our strategic partner regionally and globally. This has been characterized by the push for regional economic and financial integration in ASEAN, which includes the continuing proliferation of local currency settlement arrangements with banks serving as key enablers in this mechanism and the deepening of regional financial and capital markets. Greater banking integration within the ASEAN region is gaining traction under the ASEAN Banking Integration Framework, with attention now turning to the formulation of a similar framework for insurance integration. Malaysia's commitment to support multilateral cooperation and development is also reflected in the international organizations that have chosen to base their headquarters or offices in Malaysia, including the World Bank, the Alliance for Financial Inclusion, UNCDF, and the Islamic Financial Services Board. This will benefit Malaysia and partners by having more supply of affordable and diverse talent pool through various programs, development of new skills, and origination of FinTech and Islamic FinTech research and development that address today's and future key financial economic challenges while placing Malaysia as a center of excellence for training and capacity development. Having shared my view about the current and short-term perspective, I also understand that by itself, the existing financial and capital market sectors are not able to cater for all the increasing and expanding needs to fund the future economy. This is precisely why we need to further develop the capacity of market-based financing institutions as a reliable new source of funding. Niche institutions such as factoring and leasing companies, angel investors, PE firms, crowd-based funding and lending, as well as alternative credit providers of various industries such as motor, housing, and consumer retail sector have the potential to play an important role in contributing towards providing digital-savvy consumer with greater funding solutions. However, in our effort to introduce and allow them to the financial and capital market sectors, we shall not compromise on the following key aspects. 1. Consumer protection. This is key and must be effective at all times. 2. Effective monitoring, particularly on red flags on predatory practices, manipulative schemes, and unethical conduct. 3. Healthy debt management practices, especially if it concerns household debt. 4. Effective and reliable middle and back office digital processes and systems, where the focus should be on transparency, resilient monitoring, and timely reporting. And 5. Ongoing fit and properness of the board of directors and the management team. What I share is already happening, and rightfully cautiously. 2 notable developments are supporting the above transition. 1 is the evolution of a more comprehensive ecosystem for innovation within the financial and capital market industry, as well as the ancillary services. For instance, MDEC together with Bank Negara Malaysia have launched the FinTech Booster Program that facilitates niche institutions, FinTech startup, and innovative businesses to thoroughly understand about the 5 key aspects that I have just shared. This is in addition to various incubator programs that are providing to be highly successful in these companies to commercialize ideas, collaborate, and scale. Such programs significantly reduce the innovation costs, risk exposure for financiers and investors, as well as insurance providers. Malaysia also has in place well-developed institutions like the Credit Guarantee Corporation, Chagamas and SMA Corporation to play key roles in enhancing further growth of these companies throughout Malaysia and internationally. Second is the increasing opportunities presented for financial institutions to develop models to evaluate risks associated with innovative ventures by making use of big data analytics and artificial intelligence. However, incumbent financial and capital market institutions, either in pivoting themselves or taking the role of financing growth for innovation, need to be crystal clear about their own strategic focus. It could only be achieved by having the public interest in mind and customers at the core. Just as innovation propels the financial sectors forward, as custodians of public funds, it is trust and integrity that prevents a gulf from forming between finance and the real value creation. This not only serves to build public confidence in the financial system, but places finance firmly back as the core service for the society. Ladies and gentlemen, in closing, if innovation is the source of future prosperity, then financial solutions that promote innovation must surely be its cradle. Innovations such as the digital bank, crowdsourced funding, and soon crowdsourced insurance might or might not work. Experimenting now new solutions such as FinTech always involve risks, and many have learned that this is an imperative for any economy to grow to the next level. Many other examples of our era exist, each one illustrating the promise of innovative industries that have the potential to create high-skilled jobs and new economic opportunities that contribute to growth and development. Let us use this platform as an opportunity for us to critically reflect on the action that we can take individually and collectively to reinforce existing foundations and build new ones for sustainable growth in the new economy. The future is in our hands. Let us shape it to the advantage of the industry and the nation. Thank you for your attention.